Welcome to Caching Waves. This is an Elliott Wave update for FLR. I'm going to get into the micro count because there is a bottom potentially coming soon. But this is also an olive branch for those in FLR that are ignoring analysis, saying I must be wrong. It's neat to me because I always like when people take these things as a learning experience. Perhaps they don't believe me or Elliott Wave, but they come back later and realize that it is accurate. So I got comments last video saying it's taking off. It's taking off right here in this zone. And my count was we are coming lower, right? And I even got comments on the video. It's taking off. It's taking off. I don't change my count, right? This was not a bottoming pattern. So I'm making this video just to give an olive branch to those people who might come back to see the count and be like, realize I'm not spreading fear about your coin. I'm just analyzing the market using Elliott Wave, the best method I have found personally. I've gone through a lot, and that it does tend to hold true. And you don't have to hold through these crazy corrections. You can just wait for the market to turn and hop right back in. Doing the same thing with XRP. People have been holding this for years and years and years. Just wait and get to hop in as soon as the correction's done, right? Why put yourself through that? But anyways, I'm going to talk about this real quick. The count has changed slightly. I reanalyzed this today, and it looks like we are coming close to a potential bottom. And I'll tell you what I'm looking for this bottom to turn. Now, we were tracking this all the way up. And if you've seen my previous videos, I welcome you to go back. We did have a potential low in here, looking for a zigzag up to complete a diagonal. So this did have the potential, but when the buyers didn't step in and we rejected, we had this as the last chance to hold. We were coming out of our pitchfork. We were right at the proper fib zones, and we're like, if this doesn't hold, it's pretty much over. And I let people know that, and as soon as we broke that, it's over. Right? Lost 1 or 2% on that trade, but did well on the way up. So off our low, there is a potential bullish scenario, and I am looking to trade this long. But I'm going to take one shot at it once this pattern completes, and if it fails, that's it. I assume it's going to make new lows. I'm not biased towards this coin. You can tell me all the good news you want about it. It doesn't matter to me. The charts don't lie. If people are interested in it, it gets bought up. If they're not, it doesn't. It's really very simple based on the patterns. So how I see this playing out, if we're bullish, is wave 1 is a 3-wave move, completing our wave 2, be looking for a wave 3 up to the 618, 786. We'll have to repull those fibs 4, and we make a diagonal. But those will be quite high targets. We're not talking about a little amount of money. We're talking like 600-700% moves. Okay, so I have relabeled this. It's become a little bit more clear after the last sell-off, and this is my current primary. That is, we have a WXY. We had a 3-wave move for our W. We had our 3-wave move for our X, and we're making an ABC, just getting extended out in time. Where we have a 5, have a running flat for our B wave. A, B, and we're making a diagonal to finish our wave C, simple WXY. Now you can see I have quite a bit of confluence in this zone. The 1-to-1 there at 1505 is the 1-to-1 of this A off this B for the C, and the 1.618 is the extension of the W off the X for the Y. So not a common target for our C wave, but it does happen, and it lines up to our confluence zone. Just pass through the 618 and look to hold in this area. Now I discussed I would talk about how I'm interested in this coin, right? Well, currently I have this mapped out as a diagonal series of 3 waves, ABC, looking for this to turn into an ABC, ABC, ABC. Now the way we can get closer to this, remember these targets are the most important down here, the larger time frame ones, but we can discuss on the smaller time frames as long as labeled correctly currently, which it does seem to line up, is our diagonal targets. You can see we have kind of a shy retracement here for our wave 2. And my expectation is, I'm not sure if this is a flat. Obviously we're in a diagonal, so we can get single, double, or triple zigzags, but we'll go from this as a flat. And I look for the 618 to the 786 extension because we have a shy retracement. Where's the 786? There it is. But you can see we're very close to that zone. There's our larger targets, the 1.618 and the 1-to-1. So I wouldn't be surprised to see us even close to double bottom. Looks like we might get a double zigzag here for our 3. Come to that 618, come up for our 4. See if we overlap. We don't have to. It's now a guideline more than a rule. And come down and tag. And then we can attempt an upside move. Now the way I would trade this is I'm waiting for this to pan out. Now for this count to stay valid, we have to not come back to our wave 2, right? Because then something else has likely happened. Maybe this correction's getting bigger as an expanded flat and we come back down. But that's the first area where I'd relook at my count and be like, there's something different happening here. And when I get long is if I get this move, 3, 4, 5, you can see it's lining up to those targets pretty nicely. First indication is we break this trend line to the downside, right? And where I look for a trade setup is above the 4th wave whenever it completes. When we're at the 4th wave, whenever it completes, I'm going to go down to the 15-minute candles, all the way down on the 15-minute candles. So say our bottom is in here, and I'm going to look for a 5-wave move. Well, the ideal thing we do is a little bigger. 3, 4, 5. We get a 5-wave move above the 4th, if this is our 4th wave. And then we'd look for buying the pullback. Look for the 382, the 618, and we go long. But first I look for that 5-wave move. Now there is a different method I do, and that is if it's a very impulsive move. Let me get rid of this. Say if it's a very impulsive move above this 4th wave and it breaks right here, we'll call that the 4th wave. If it comes up very quickly, like you're seeing volume come in, which can happen, I would buy the breakout above the 4th wave correction, and the stop would just go at the previous low. That's the 2 methods I use. So I'm either buying the breakout, stop at the last pivot, easy. Remember, targeting that like 600% move, right? Or if on the 15-minute I can see a micro 5-wave move, I'll look to buy the pullback, get a little bit better entry. But that way I'm involved both ways. And just realize that this method, those of you who said it's taking off last video, it didn't, right? It didn't. I'm not trying to like rub it in anybody's faces. I'm just trying to make them realize that it doesn't matter how confident you are on a coin. The chart is everything, right? So that's what I'll do. I got to avoid all this garbage for the last couple months. And as soon as we get this move and we get a breakout, I get to hop right in, right? Just have my alarm set, buy, stop at this low. Easy. But anyways, that's a olive branch to people who do not believe the analysis or, you know, had so much blinders on that this coin's going to the moon. Give you a chance to realize how Elliott Wave works. All right, guys, so that's it for FLR. Thanks for watching. I'll see you on the next one.